Welcome back to the deep dive. Our mission, as always, is pretty clear. Cut through the noise, sift through all the complexity, and really pull out those important nuggets of knowledge you need to be well-informed, maybe even surprisingly so.
Yeah, get ahead of the curve a bit.
Exactly. Today, we're plunging into something that's not just making waves. It feels like it's actually reshaping the coastline where traditional finance meets the crypto world.
That's a good way to put it, a definite shift.
Okay, let's unpack this.
Right.
We're talking about the recent Nasdaq debut of something, well, pretty significant. It's caught the market's attention fast. The Ether machine.
Right.
And this entity, it seems poised to fundamentally change how institutional investors get exposure to digital assets.
It really could be a game changer in that respect.
So our goal for this deep dive, we want to dissect the announcement, understand the mechanics behind it, figure out the implications, which seem pretty far-reaching.
Yep.
And crucially, connect all those dots back to you, the listener. Whether you're a seasoned investor watching every tick, or maybe just really curious about how crypto is evolving.
Yeah, it touches on a lot of different angles.
And honestly, there are some genuinely exciting bits here. We've got a blank check merger, which is always interesting. A staggering amount of capital raised over $1.6 billion.
Yeah, that number jumps out.
Massive Ether holdings right from day one, and shares that, well, they literally doubled in pre-market trading.
Which tells its own story, doesn't it?
It really does. So get ready. This is a fascinating story of finance, innovation, all converging.
What's fascinating here, I think, is that this isn't just another crypto news headline that flashes and fades.
Right. It feels more substantial.
Exactly. This deal represents a truly pivotal moment as part of this ongoing story, this narrative of institutional adoption of digital assets.
We've been tracking that trend for a while.
We have. And we're seeing this clear, undeniable and actually accelerating trend towards putting crypto directly into traditional investment vehicles.
Making it accessible in ways we maybe wouldn't have thought of a few years back.
Precisely. Ways that just weren't really conceived of. Our insights today, they're mostly guided by excerpts from a detailed Reuters report. It's titled The Ether Machine, Nasdaq Debut and Institutional Crypto Exposure.
Okay. Good source.
Yeah, and this specific event, it's not just about one company listing shares. It's a really powerful signal, unmistakable actually, of deeper structural market shifts.
And specifically for Ether.
Especially for Ether, yeah.
Yeah.
The world's second largest cryptocurrency. As you'll hear, it's absolutely central to this whole thing. And the very fact that this is happening on Nasdaq, a major exchange, well, that underscores this growing legitimacy, this maturation within the digital asset space itself.
Right. It's not some fringe exchange listing. It's Nasdaq.
Exactly. That carries weight.
All right. Let's peel back the layers then. Get into the genesis of this thing, the Ether machine. Okay.
At its core, it's a new crypto venture. But, like you said, not typical. The sources say it's backed by prominent crypto investors.
And that word prominent really matters here.
Yeah, it's easy to just gloss over, but it signals serious industry weight, doesn't it? Deep pockets behind it.
Absolutely. We're talking leading VCs, established crypto powerhouses, firms known for multi-billion-dollar portfolios, strategic long-term bets.
So this isn't some, fly-by-night thing. It's got real conviction, real strategic thinking driving it.
Definitely feels that way.
Now, the foundational detail here is the merger itself. You've got the Ether Reserve, that's the actual crypto venture.
Right.
And it's merging with Dynamix Corporation, which is, as you mentioned, the blank check firm.
The SPAC, yeah.
Right, the SPAC. And for anyone listening who isn't maybe super familiar with these, a blank check firm or special purpose acquisition company, it's basically a shell company, right? It's already listed publicly.
Correct. No operations of its own initially? Exactly. Its only job is to raise capital through an IPO and then use that money to acquire an existing private company.
Basically taking that private company public through the merger.
Yeah, and it lets them bypass that often really long, complex, scrutinized traditional IPO process.
It's a faster track. Often.
If we connect this to the bigger picture, this merger structure, the SPAC route, it's a really strategic move, isn't it, for a crypto-focused company like the Ether Reserve?
Oh, absolutely. Highly strategic. It gives them efficiency and speed. And in the crypto space, as you know, speed is critical. Things move so fast.
Right. Trying to do a traditional IPO in this sector must be tough with how quickly things change.
Exactly. A SPAC offers a more streamlined path. But what's really compelling about this deal, what adds, immense weight to its legitimacy, is the caliber of the investors involved in that blank check part. We're not just talking prominent in general terms.
No. Who are we talking about?
We're talking industry giants.
Yeah.
Names like blockchain.com, huge wallet provider like 80 million users.
Wow.
Kraken, consistently a top 5 global crypto exchange by volume.
Right.
And Pantera Capital, they were pioneers in blockchain investment, managing over, what, $5 billion now?
So foundational players, pillars of the industry.
Absolutely. And their involvement contributing more than $800 million through an upsized common stock offering. You really can't overstate that.
No, that's serious money and serious validation.
It signals incredibly strong industry confidence. Confidence in the Ether machine's vision, its execution, its long-term viability, its clear validation of its potential.
Like the establishment giving its blessing.
Almost, yeah. A halo of trust, you could say. And the choice of Nasdaq for the listing. The combined company will be the Ether machine, trading under ETHM.
ETHM, got it.
That's also highly strategic. Nasdaq is known for tech, for growth companies. It attracts those forward-thinking, disruptive businesses.
So it aligns perfectly with crypto's image.
It does. It puts ETHM alongside established tech giants, which helps normalize crypto exposure in traditional finance circles.
Right, so analysts covering tech might start covering this too.
Precisely. Drawing in a different kind of investor. Now, the deal close isn't expected until Q4 2025.
Okay, so still a ways off.
Yeah, which also suggests a methodical approach. They're taking time to clear all the regulatory hurdles, handle the integration carefully.
Makes sense. Given all this capital, this backing, the next question is, well, how are they going to use it? What's the Ether machine actually going to do?
Yeah, what's the plan?
Well, its core objective is pretty groundbreaking. It gets right to the heart of why this is such a big deal.
Okay.
The company plans to launch with more than 400,000 Ether on its balance sheet.
Wow. 400,000 Ether. Right out of the gate.
Yeah, let that number sink in. At current prices, that's a huge asset base, right? Multi-millions, easily.
Oh, yeah. Substantial. Immediately makes them a serious player.
And this massive holding, it positions it as, and this is a direct quote, the largest public vehicle for institutional exposure to the world's second largest cryptocurrency.
The largest public vehicle? That's a bold claim. But with 400K Ether, it sounds plausible.
It does. It's not just another crypto fund or some speculative bet. It seems designed to be the regulated gateway for big institutional money into Ether.
A primary entry point.
Exactly. And here's where it gets really interesting. The immediate market reaction.
Yeah, the price action.
Shares of Dynamix, the SPAC, they more than doubled in pre-market trading right after the announcement.
Double. Instantly.
Yeah. What does that tell you about investor sentiment?
It screams confidence. Eagerness, almost.
Yeah.
Like the market was waiting for something exactly like this.
Right. It suggests massive, maybe pent-up demand for this kind of regulated, easy-access Ether exposure.
Absolutely. It validates the whole strategy of bringing this kind of vehicle to Nasdaq.
It's like a testament to the idea that traditional investors, maybe those who were hesitant before, are now eager for ways into crypto that fit their existing frameworks, their comfort levels, without the headaches of direct custody.
Yeah. Custody is a big hurdle for institutions.
So this solves that problem for them.
Indeed. And that pre-market surge, it's not just, fleeting excitement or pure speculation.
No.
No, I think it's a profound signal. It synthesizes these broader market trends driving these ventures. This deal clearly highlights rising, systematic institutional interest in actually holding crypto on corporate balance sheets.
Right. Not just treating it, but holding it as an asset.
Exactly. This is different from the earlier, often more retail-driven or speculative interest. It's a deeper, more fundamental shift, integrating digital assets as strategic holdings.
We saw a bit of this with Bitcoin, right? Michael Saylor at MicroStrategy.
Absolutely. He really popularized that strategy, holding significant Bitcoin as a primary treasury reserve.
Yeah, he showed it was possible, even potentially value driving for a public company.
It definitely sparked a wave of interest, although mostly focused on Bitcoin, seen as that digital gold.
Right, the store of value play.
But this deal, the Ether machine, it signifies a strong pivot. Or maybe, more accurately, a major expansion towards Ether.
So Ether stepping out of Bitcoin's shadow, institutionally speaking.
I think so, yes. Asserting its own unique value proposition in their eyes.
So what does this mean for Ether specifically, this growing institutional focus?
Well, we've already seen its price reflecting some of this confidence, haven't we?
Yeah, it surged recently, hit a 6-month high just last Friday.
Right, even before this news really hit the mainstream. And that surge isn't just hype, it's backed by some fundamental developments.
Like what?
Crucially, Ether has benefited hugely from increased regulatory clarity around U.S. dollar-pegged stablecoins.
Ah, stablecoins. Okay, why is that so important? What kind of clarity?
Well, we're seeing legislative efforts, discussions around stablecoin bills in Congress, clearer guidance from regulators like the OCC, the Treasury.
Trying to set up a proper framework.
Exactly, a more defined legal and operational framework. This reduces that significant uncertainty that institutions, especially their compliance departments, faced before.
Right, compliance is key for them.
Vital. And this matters for Ether, because most of these stablecoins facilitating billions in daily transactions across crypto are issued and transacted on the Ethereum blockchain.
So the network Ether runs on is critical infrastructure for stablecoins.
Overwhelmingly so.
Yeah.
Therefore, growing regulatory comfort with stablecoins directly translates into less uncertainty for investors looking at the whole Ethereum ecosystem.
It de-risks the activity happening on the network.
Precisely. It makes Ether and everything built on Ethereum a far more palatable, more understandable investment for institutions.
It solidifies Ether's utility beyond just being digital money.
Yes, it highlights its role as that foundational programmable money layer for this huge growing digital economy.
So institutions see a clearer path to using DeFi, maybe yield opportunities, enterprise solutions.
All of which often rely on Ether, maybe for gas fees or as collateral. It just makes the whole ecosystem seem more investable.
This really sounds like a masterstroke then. Timing, strategy, positioning Ether perfectly.
It seems very well timed, yes.
But who's actually steering this Ether machine? Let's talk leadership. One key figure is Andrew Keys. He's going to be the chairman.
Right, Andrew Keys, a name many in the crypto space will recognize.
He brings serious weight, doesn't he? Deep industry roots. His background is especially interesting, former executive at Consensus.
Yes, and Consensus isn't just any crypto firm.
No, it's a powerhouse in the Ethereum world.
Yeah.
Arguably one of the most influential blockchain tech companies globally.
Founded by Joseph Lubin, an Ethereum co-founder himself.
Exactly. So that connection links the Ether machine directly to the foundational ecosystem of Ether, not just financially, but intellectually, technologically.
It suggests this isn't just a purely financial play.
Right. It feels like a strategic move tapping into the brain trust that actually helped build Ethereum and continues to shape it.
That kind of leadership brings more than just management skill. It brings visionary guidance, deep understanding of the tech and where it might be heading.
So having someone like Andrew Keys involved from Consensus, that adds huge credibility, right? Invaluable expertise.
Immense credibility, yes, and deep industry knowledge. It's not just a token appointment. It suggests a real strategic understanding of Ethereum, beyond just the numbers.
Meaning decisions might consider the long-term health of the network itself.
Likely, yes. Not just short-term profit. It implies a focus on combining that native crypto expertise with traditional finance know-how.
Which seems crucial for success here, bridging those two worlds.
Absolutely crucial. You need to navigate the often volatile, complex crypto world and the established, regulated traditional markets. That dual expertise is key.
And Key's background means he gets the tech, smart contracts, dApps, Ethereum's roadmap.
Which is vital if you're managing a treasury with 400,000 Ether in it.
Good point. So connecting the dots, this mix of experienced leadership, prominent crypto backers, it makes ETHM much more appealing to traditional investors, doesn't it?
Significantly enhances the appeal and the perceived stability. Think about those big players, pension funds, endowments, corporate treasuries.
Yeah, they might normally be wary of crypto's volatility or, governance issues.
Exactly. But now they're offered a vehicle that's publicly traded on Nasdaq, led by someone with deep roots in Ethereum's foundation,
Right.
and backed by major established crypto firms. That combination creates a powerful bridge of trust.
It mitigates a lot of the usual concerns.
It does. It's like a stamp of legitimacy, a sign the market's maturing, offering familiar wrappers for these novel assets.
Okay, stepping back a bit then. Let's look at the bigger picture the Ether machine fits into. This isn't just a one-off deal, is it?
No, definitely not an isolated incident.
The Reuters source mentions, in recent months, several projects have announced plans to publicly list their shares while aiming to wrap crypto assets into equity to attract traditional investors.
It's a clear trend. We're seeing more attempts to bridge that gap.
Yeah, things like Bitcoin miners listing, crypto service providers going public. But the Ether machine seems different because it's focused squarely on direct exposure to the underlying crypto itself, Ether.
That is a key distinction, yes. Holding the asset directly on the balance sheet.
So what does this all mean for, the average investor or just someone watching the markets evolve?
Well, it signals this fundamental shift, doesn't it? From needing direct crypto ownership
Right, setting up wallets, managing keys.
to getting exposure through equity, publicly traded shares.
How much does that simplify things for traditional portfolios, both institutional and maybe sophisticated individual investors?
It's huge. Imagine you're an endowment fund, a corporate treasury, even just a tech-savvy person wanting Ether exposure.
Uh-huh.
But you don't want the hassle, the security risks, the steep learning curve of direct ownership.
Yeah, managing wallets, private keys, understanding gas fees, staking. It's a lot.
It is. By wrapping the crypto into equity, you remove those operational barriers. You get the exposure you want through familiar channels.
Like your standard brokerage account.
Exactly. It fits seamlessly into existing investment frameworks. It's bringing crypto to a much broader audience without making them blockchain experts or forcing them to handle custody risk.
You've hit on a really critical point there. This whole movement, and the Ether machine is a prime example. It's a massive step towards truly mainstreaming cryptocurrency.
It really is. Yeah. More than just making it available, it's bringing it to investors on their terms, within frameworks they already know and trust.
That feels like a profound shift for accessibility.
It is. And think about what being the largest public vehicle for institutional exposure really enables.
Yeah. What does that unlock?
It means these massive pools of capital pension funds managing retirement savings for millions, university endowments funding education and research, large corporations diversifying treasuries.
Trillions of dollars, potentially.
Exactly. They can now gain Ether exposure through regulated, publicly traded shares. They don't need to navigate direct crypto purchases, specialized custodians, regulatory gray areas.
All the stuff that's held many of them back.
Right. Instead, they buy ETHM shares like any other stock. It dramatically lowers the barrier to entry for all that capital potentially looking for digital asset exposure.
So this raises an interesting question, though. Does this make crypto less crypto? Or is it just making it more accessible?
That's the fascinating tension, isn't it? It's complex, almost a paradox.
How so?
Well, on one hand, you are removing some of the core decentralization aspects, right?
Yeah.
You're not holding the asset directly on chain, controlling your own keys.
You're trusting this public company to hold it for you.
Exactly. It's like investing in a gold miner stock versus holding physical gold. You get price exposure, but you give up direct control and take on corporate risk. For some purists, that changes the whole ethos.
Yeah, I can see that argument.
But on the other hand, you're massively expanding the reach, the liquidity, the legitimacy of the asset class. It embodies this tension between radical innovation and the pragmatic need for regulation and investor protection that traditional finance demands.
So it's like a pragmatic evolution, acknowledging the current system to bring the benefits to more people.
That's how I see it, even if it involves some philosophical compromise. And looking ahead, this could absolutely pave the way for similar vehicles. Other major cryptos, maybe diversified baskets of digital assets.
Like crypto ETFs, almost?
Potentially, yeah. The Ether machine isn't just about Ether. It could be a template, a blueprint for future institutional integration, maybe even including tokenized real-world assets down the line.
Okay, so why should you, our listener, care about all this?
Because it fundamentally changes the playing field. It alters how institutional money, huge amounts of capital, can flow into the crypto space.
And that influx could have big effect.
Potentially significant effects. Increased liquidity, maybe enhanced stability over time, further legitimization of the entire market in the eyes of the broader financial world.
So crypto growth isn't just limited to early adopters or VCs anymore.
It's transitioning into the mainstream investment conversation. It's a clear, undeniable sign of a maturing asset class, moving from the fringes.
Towards becoming a more integral part of the global investment landscape.
Exactly.
Yeah.
And that could influence everything from how you think about diversifying your portfolio to the strategic decisions of major corporations.
What an incredible deep dive that was. The Ether machine. We've really seen its transformative nature, haven't we?
Yeah, quite a development.
From the huge capital raised over $1.6 billion to its positioning as the biggest public vehicle for institutional Ether exposure. We unpacked that immediate, really strong market reaction shares doubling pre-market.
A very clear signal.
And how that reflects these underlying trends. Growing institutional interest, especially in Ether, helped along by that increasing regulatory clarity around stablecoins.
It all ties together.
It really does. It's clear this isn't just a one-off event, but really a marker of bigger shifts happening right now.
And ultimately, the Ether machine really embodies this ongoing dynamic evolution of financial markets, doesn't it? It's actively blurring the lines between traditional assets and decentralized ones.
Integrating them into mainstream structures.
Exactly. It's a testament to the innovation happening and the growing willingness of traditional finance to engage with it, even if it's, on their own terms.
It feels like a new chapter, not the end of the story.
Far from the end, I'd say. Just a new chapter in how assets are valued, traded, and integrated globally.
Yeah.
Now, before we wrap up,
Yeah.
if you're finding these deep dives valuable, if you want us to keep bringing you insights into this constantly evolving crypto world,
Please do consider hitting that subscribe button.
yeah, subscribe, maybe leave a comment, engage with the content. It genuinely helps us reach more curious minds, keeps this deep dive engine running.
Absolutely. Your support really does make a difference. We appreciate it.
We do. And this whole discussion, it leaves us with an important question for you to think about. As more and more crypto assets become accessible through these traditional equity markets, how might that fundamentally reshape the entire investment landscape? And maybe even, what does it mean for the very definition of a diversified portfolio in the years ahead?